Fraud and Fortunes: The Anatomy of American Greed. A comprehensive look at history's most audacious financial crimes. The landscape of American financial crime presents a disturbing tableau of human ambition gone awry, where the pursuit of wealth eclipses morality and the line between visionary and villain becomes dangerously blurred. These cautionary tales reveal not just individual failings, but systemic vulnerabilities that continue to plague our financial institutions and corporate culture. The Stratton Oakmont Saga, Jordan Belfort's blueprint for financial carnage. Jordan Belfort's Stratton Oakmont operation represents perhaps the most brazen example of Wall Street excess in modern history. What began as a modest brokerage firm in the late 1980s rapidly metastasized into a full-fledged criminal enterprise, employing over 1,000 stockbrokers who collectively defrauded investors of approximately $200 million. Belfort's genius lay not in financial acumen but in psychological manipulation. He created a cult-like atmosphere where young brokers were indoctrinated into the Stratton way, an toxic blend of aggressive sales tactics and outright deception. The firm's sin-famous pump-and-dump scheme artificially inflated worthless penny stocks, with Belfort and his inner circle profiting handsomely before the collapse. While Belfort's 22-month prison sentence and subsequent Hollywood glorification through The Wolf of Wall Street created a perverse mythology around his crimes, the reality remains that thousands of retirees and small investors saw their life savings evaporate in Stratton's wake. The $110 million restitution order, of which Belfort has paid only a fraction, stands as hollow consolation for victims who received pennies on the dollar. Insider trading at its peak, the Raj Rajaratnam network. Raj Rajaratnam's Galleon Group insider trading ring represented a quantum leap in the sophistication of illegal market manipulation. Unlike traditional insider trading cases involving one or two sources, Rajaratnam cultivated an extensive network of corporate insiders spanning multiple industries. His operation functioned like a shadow market intelligence agency, with moles at companies like Goldman Sachs, Intel, and McKinsey feeding non-public information that generated $75 million in illegal profits. The FBI's extensive wiretap operation, which recorded over 2,400 conversations, provided unprecedented insight into how insider information flows through Wall Street's upper echelons. Rajaratnam's 11-year sentence, the longest ever for insider trading at the time, marked a watershed moment in financial enforcement, demonstrating prosecutors' willingness to treat white-collar crime with the same seriousness as violent offenses. WorldCom, the collapse that changed corporate America. The WorldCom scandal remains the textbook example of accounting fraud at scale. Bernie Ebbers' $11 billion deception didn't emerge overnight but developed gradually as the company struggled to maintain its high-flying stock price in the face of market realities. The fraud's mechanics were startling in their simplicity. Ordinary operating expenses were reclassified as capital expenditures to artificially boost profitability metrics. What makes WorldCom particularly significant is its role in shaping subsequent financial regulation. The scandal directly contributed to the passage of the Sarbanes-Oxley Act, which fundamentally changed corporate governance and accounting practices. The human cost was immense, with 30,000 employees losing their jobs and countless investors seeing their retirement savings wiped out. Ebbers' transformation from small-town gym teacher to telecom titan to federal inmate serves as a stark reminder of how quickly fortunes can reverse in the corporate world. The psychology of fraud, common threads in financial crime. Examining these cases collectively reveals disturbing patterns in white-collar criminal behavior. Nearly all feature some combination of charismatic leadership that discourages dissent systems designed to circumvent checks and balances, gradual moral compromise that makes each subsequent unethical decision easier, a culture that prioritizes results over methods, sophisticated efforts to conceal wrongdoing once it begins. These schemes also expose critical vulnerabilities in our financial and regulatory systems, from the difficulty of detecting accounting fraud in real time to the challenges of prosecuting complex financial crimes in ways that resonate with juries. Perhaps most troubling is the recurring pattern of rehabilitation and redemption narratives that often allow perpetrators to rebuild their lives while victims continue to suffer the consequences. The lasting impact on financial regulation. Each major fraud case has left an indelible mark on the American financial landscape. Stratton Oakmont contributed to reforms in penny stock regulation. WorldCom's collapse accelerated SOX compliance requirements. The Galleon case revolutionized insider trading enforcement management tactics. Yet for all these reforms, new schemes continue to emerge, suggesting that the fundamental human drivers of financial fraud, greed, ambition, and the willingness to cut corners remain unchanged. Why these stories matter today. In an era of cryptocurrency speculation, SPACs mania, and influencer-driven investment schemes, these historical cases take on new relevance. They remind us that extraordinary claims require extraordinary evidence. Complexity often conceals deception. Charisma is no substitute for transparency. Systemic safeguards only work when properly enforced. The human cost of financial fraud extends far beyond dollar amounts. For those seeking to understand the anatomy of financial deception or protect themselves from becoming victims, these cases offer invaluable lessons in skepticism, due diligence, and the importance of asking tough questions. Join Fraud and Fortunes for ongoing coverage. The stories we've examined represent just a fraction of the financial malfeasance that occurs each year. As new schemes emerge and old ones evolve, Fraud and Fortunes remains committed to investigating developing financial scandals, analyzing enforcement trends, interviewing key players in major cases, providing actionable advice for investors, exploring the human stories behind the headlines. We invite you to subscribe for regular updates as we continue our mission to expose financial fraud in all its forms. Because in the high-stakes world of money and power, the next major scandal is always just around the corner. And the more we learn from history's mistakes, the better equipped we'll be to recognize it.